Hi, Frank Flegg here, founder of Ethical Property Partners. So what is going to happen in 2021 with the housing market? Well, let's look at what's happened so far in 2020. Pretty good start to the year, January, February, 3 weeks of March, all good, property prices going up, number of transactions nice and healthy. If you look at the last 10 years or so, nice consistent growth pretty much since the last credit crunch. However, then we had the lockdown, we had COVID-19, and it literally fell off a cliff. Unprecedented drops in our GDP, gross domestic product, but also in number of transactions. Not surprising when you've got Boris Johnson stood on the steps of number 10 saying, don't move house, don't move at all unless you've got a good reason. People took that to think that they couldn't move at all. They couldn't even sell houses. We were told that. We were told by local councils, you shouldn't be marketing, you shouldn't be buying any houses. That isn't the case at all. It wasn't the case. We continued to buy throughout because people needed to sell. However, the number of transactions dropped off a cliff, as I say. Now, we're in an unprecedented growth phase of the property market. No one predicted it, no one. And if you look back at the predictions, it was this cliff phase and then it was going to get worse and worse and worse. That hasn't happened. It has turned and gone incredible, absolutely incredible. And now that's starting to affect the predictions for next year. The Royal Institute of Chartered Surveyors, RICS, they were predicting a 16% drop next year, and now they're predicting around an 8 to 10% drop, depends where you get your data from. Most pundits, most government agencies were predicting around a 20%, 15%, and now they all seem to be reining that back. Fascinating when you look at our economy and what's happening to that. It's contracting at a rate of knots at the moment in terms of going into the second phase of a lockdown, in terms of the localized lockdowns, etc. So what's going to actually happen? We've had this massive boom, and you can understand why. People were in their homes, they were thinking to themselves, I want a bigger garden, I want an extra bedroom. They're thinking, actually, I can work from home 3, 4, 5 days a week now, so I'll spend much more time in my house. I'm willing to invest more money in it, which is absolutely fine and makes complete sense. But what should we be doing as property investors? What should we be doing? Because that's the real question. It doesn't matter what happens to the property market. It doesn't matter if prices continue to go up. I don't think they will. It doesn't matter if prices start to drop. You need to make sure that you continue to make money in the property market. 92% of estate agents expect prices to drop next year. Now, if you think about furlough coming to an end next month, if you think about the mortgage rates, at the moment, mortgage lenders are pulling their products off the market. First-time buyers can't get a 90% mortgage now. They're looking at an 85% mortgage at a time when prices have just jumped up. So first-time buyers are coming out of the market. The government's Help to Buy scheme, that was due to be reined in next quarter, so quarter 1 2021. Whether or not that still goes ahead, we don't know. You've also got the fact that loads of companies are now going under. You've got VAT that was rolled forwards that now needs to be paid in quarter 1, quarter 2 next year. Loads of companies have postponed their corporation tax, which the government allowed people to do. You've got bounce back loans that were taken that are going to start having to be paid in 2021. You've got coronavirus loans for larger companies that are needing to be paid. You've got the unemployment that's going to happen when the furlough scheme ends. Lots and lots of factors, not to mention the stamp duty holiday that comes to an end. Now, if you look back at the credit crisis that started in 2008, we had a stamp duty reduction then, a stamp duty holiday similar to the one we've got now. That lasted for 15 months. And at the end of it, the number of transactions went through the floor. It dropped. If you look at it, it's amazing, the drop off, because it's an artificial stimulus. So for me, what I'm expecting is for the market to drop, number of transactions to drop in 2021 and prices to drop in 2021. Now, we're already seeing that in flats. City centre flats are already dropping. It's just that houses, more expensive houses outside cities, are going up much faster at the moment. So it's shielding that drop in the city centres. I predict that house prices will drop quite substantially. I'm actually more around the 15% mark. In the last major recession that we had, so 2008, 2009, we saw a 20% drop in house prices. Now at that time, I did 26 transactions in 2009 with myself and my business partner. I wasn't really geared up for properly taking advantage of the weak house prices. But this time, I'm helping all of my clients to be ready to absolutely make the best of the next couple of years. And I thought this was going to be a short, sharp, really painful recession. Because of all the government stimulus packages, I'm actually now predicting it's going to be a lot shallower, so not the 20-25%, I think more like 15 to 20% drop in house prices, but over a longer period of time. Maybe we'll still be in this in 2023, who knows? So what should you be doing as a property investor? Well, I think right now, with the market so buoyant, you should be selling. Some of my clients are even selling their own homes at top dollar right now to get their war chest ready to go buy next year and the year after. Because so long as you're still in the market and you keep buying property, you're going to benefit from those low prices. Not that necessarily the right thing for everyone, but a really good idea for you to have a war chest going into this recession or going into this housing situation, this opportunity to buy. So long as you buy throughout, and we're buying at the moment, we're buying into Q1 next year, Q2, Q3 next year. So long as you keep buying, you will benefit from something called pound cost averaging. And what that means is, rather than trying to guess the market, guess when the bottom is and buy a couple of properties there, you continually buy at regular intervals all the way down and then all the way back up. And your pound cost average of properties that you buy is going to be phenomenally positive. It's going to be really good prices that you buy them at. As property investors, all we know is that when prices come down, it's a great time to buy, because that means that emotional investors, at the moment we've got emotional buying going on, which is why we're selling. Emotional buyers are paying above the odds, they're paying top dollar, and so we're selling at the moment. However, once it stops, we'll stop selling and we'll be buying. Now we're still buying at 25%, 30%, 35% below market value, because the market's not going to drop that much. So we're still buying at those kind of prices now while selling at top dollar. And let's be honest, if everything I've just said in the last 5-10 minutes, it doesn't come true and the market continues to go crazy, that's great, because we're still buying at below market value prices and we're still selling. So you have to position yourself in the market. You have to treat your property business in such a way as you make money regardless of what happens to the market. And so those are my predictions for 2021. But my main message to you is, make sure you continue to buy at below market value prices regardless of what happens. And if you do that regularly, in 2, 3, 5, 10 years time, you will look back and see the pandemic, which may still be around at that time, it may be a distant memory, will be an event that helped you to massively increase your net worth, massively increase the legacy that you can leave for your family, and massively increase your financial stability and your passive income moving forwards. Happy investing. If you've enjoyed this episode and you would like to know more, whack the subscribe button, click the notification bell, and I will see you again soon. In the meantime, happy investing.